This is Nightly Business Report with Tyler Matheson and Sue Herrera.
What a way to start the week. The market climbs to levels never seen before as enthusiasm returns to the technology sector and investors regain confidence in the economy.
Flying high. Will 2017 be one of the strongest years yet for the aerospace and defense sectors?
Watershed moment, why it's a key time for investors looking to put their money in the world's second largest economy. Those stories and more tonight on Nightly Business Report for Monday, June 19th. And good evening, everyone. I'm Contessa Brewer in tonight for Sue Herrera.
And I'm Bill Griffith in tonight for Tyler Matheson, coming to you right now from the New York Stock Exchange, where the blue chip Dow and the S&P both closed at records today. With no major economic reports, the optimism seems to have come from the technology sector, which is the best performing group this year, even after that wobbly performance that we saw last week. Here are the closing numbers for this Monday. The Dow Industrial Average advanced by 144 points to close at 21,528, new record. The NASDAQ was up 87. That's a 1.5% gain. The S&P 500 added 20 points today. Contessa?
So if you're a long-term investor, you're probably not complaining about the market's performance so far this year. With history as a guide, Mike Santoli takes a look at what could happen in the months ahead.
Not quite halfway through 2017, the stock market has already returned nearly 10%, equal to the long-term average gain for a full year. But it would be a mistake to assume this means stocks are way ahead of themselves or due to stall for the next several months. It turns out the stock market only rarely produces an average return in a given calendar year. Since 1928, only 6 years saw the S&P 500 index gain between 5 and 10%, what we've come to think of as the long-term average yearly performance. The index has climbed more than 20% in a year, 4 times as often, in fact, and experienced outright declines 30 times in those 89 years. This is a good reminder that equity markets deliver their rewards in waves, not in metered doses. So if the market is unlikely to simply idle near this level for the next 6 months, where might it go based on current conditions and historical patterns? While no one can ever say with much certainty, the weight of the evidence tilts toward the upside. Beyond the ongoing recovery in corporate profits and solid global economic growth, the behavior of the market itself this year, a calm, persistent uptrend, most closely resembles past years that finished strong. Whenever the S&P has been up at least 7.5% in a year's first 100 days, as it was this year, stocks added to those gains through year-end 20 out of 23 times. And since 1950, if there have been at least 15 all-time highs through May, just like this year, the index added on average another gain of nearly 8% through December, which is significantly better than in the average year. One looming negative exception to these encouraging patterns is 1987. A scary year to come up in historical comparisons, given the crash that October. Yet it's important to note that stocks had soared a whopping 40% from January into August that year, a far more overheated market than the current one so far. None of these historical patterns make the market immune to shocks from a sharp growth slowdown, an aggressive series of Federal Reserve rate hikes, or a political crisis, but they do serve as comforting context for a stock market that has surprised many this year with its quiet, relentless strength. For Nightly Business Report, I'm Mike Santoli.
Jack Adlon joins us now to talk more about the market and if the gains we've seen so far this year can continue in the months ahead. Jack is the Chief Investment Officer at BMO Private Bank. Good to see you again, Jack. Welcome back.
Thanks, Bill. Thank you.
By many measures, this market is overvalued. You agree with that. So what's powering it, and can this continue, do you think?
Yeah, I think it's a combination of certainly improving earnings. There's no question about it. But you're right. Relative to those earnings and revenue to revenues, the market is still at pretty stretched levels. So what it is, I believe, is liquidity. It's that age-old drip that's been going on now since the financial crisis. In fact, over the last 12 months, central banks collectively have added more than $2 trillion to the financial system. And I think that's emboldened investors and allowed them to take on maybe more risk than they would normally like to see when values are like, where they are today.
And Jack, what we saw today in the markets is much of the rally being driven by tech here. Is the worst over? And if so, does that worry you that you're seeing a correction of maybe 3% and then just upward movement. Let's get on with it and keep growing and adding money into the tech sector.
Well, I think, Contessa, the tech move that we had this year caught a lot of people flat-footed. And so when they saw that downdraft toward the end of last week, I think most people looked at it more as an opportunity than a threat. It remains to be seen how that plays out. Certainly, tech is relatively expensive, although if you look at it, relative to its own history and relative to the market, it's not as stretched as it was, say, in the tech bubble in 1999-2000.
Our viewers may be wondering, gee, is this the time to be getting in if I'm not already there, or should I be committing new money? Jack Bogle often says it's always a good time to invest, especially if you're dollar cost averaging. What does Jack Adlon say about this market right now?
I'm not going to refute the notable Jack on this one, but, a lot of it also depends on your time frame. Remember, don't touch stocks unless you have at least 7 to 10 years to let it percolate in a portfolio and let it grow over time. I think if you build a portfolio right, you should never have to sell anything at a loss. And what that really means is you've got to time your needs, your drawing against your portfolio against the assets that you're holding. So if you need something tomorrow, don't put it in the stock market, put it in a money market fund. If you can hold for 7 to 10 years, certainly long-term investing makes a lot of sense.
Jack Adlon with BMO Private Bank. Always good to see you, Jack. Thank you.
Thanks, Bill.
The Supreme Court has tightened rules on where injury lawsuits can be filed. The decision is considered a win for businesses that want to prevent plaintiffs from shopping around for friendly courts. The justices overturned a lower court ruling that allowed hundreds of out-of-state patients to sue Bristol Myers Squibb in California over prescription drugs.
And in a separate case, the Supreme Court ruled that trademarks that are seen as disparaging are protected under the First Amendment. That case, which involved an Asian American musician, could have implications for similar disputes, including for the Washington Redskins, which had its trademark revoked under the same statute that the justices invalidated today.
Also in Washington, executives from some high-profile technology companies, including Microsoft, Intel, and MasterCard, arrived at the White House for the first meeting of the American Technology Council. They met with presidential advisor Jared Kushner and focused in part on modernizing the government.
Together, we will unleash the creativity of the private sector to provide citizen services in a way that has never happened before. We will foster a new set of startups focused on GovTech and be the global leader in the field, making government more transparent and responsive to citizens' needs.
Eamon Javers is following the story for us. Eamon, they were talking about 6,000 data centers for the government here, $86 billion that the government spends on technology. So what else is there to talk about in a big technology summit like this?
Well, Contessa, the one stat that got my attention today was they said that the Department of Defense is still using those old 8-inch floppy disks that we all remember from the distant past. That's still in the government IT procurement system. So they're saying they want to take some ideas from these private sector executives and use them to modernize the way the government does business. They're trying to get best practices from the glittering lights of Silicon Valley. We've got Tim Cook of Apple here, Eric Schmidt of Google/Alphabet here as well. The idea is they're just going to simply pick their brains here for some good ideas.
Wait, not everybody uses floppy disks anymore?
Is that old?
We know, yeah, you can put the phone down for a second there, because I want to ask you about the CEOs who were there. We know that Jeff Bezos of Amazon, Tim Cook of Apple were there. Any notable absences?
Yeah, Mark Zuckerberg from Facebook was invited to come today. I'm told declined, saying that he had a scheduling conflict. I'm also told the White House was sort of only interested here in CEO-level executives, so that's why there's nobody else here from Facebook. But that is a big person who's missing from the picture here today. And obviously Zuckerberg has been on his own sort of political-like tour of the country out there, meeting with Americans of every demographic in every state. You wonder whether he has political ambitions or whether it really was just a scheduling conflict here at the White House.
And I know a lot of those CEOs are sort of walking a fine line between trying to satisfy customers who may not like what the White House has to say, and also trying to have the ear of the president to affect change. Eamon, thank you for covering all of that for us in such great detail.
Meanwhile, the president of the Federal Reserve Bank of New York has confidence in the economy. Bill Dudley said today that inflation should rise alongside wages, allowing the central bank to continue to gradually tighten interest rates. The influential policymaker added that the economy is in a good place right now.
Americans are feeling good about the economy. That's the conclusion of CNBC's latest All-America survey, with several key components hitting all-time highs. Steve Leisman takes a closer look at those results.
Economic optimism in the United States remains strong as the post-election bump continues and even looks to be strengthening. The percentage of Americans who are optimistic about the current situation and optimistic about the future remains at a record 30%. Spurred on by surging Republican optimism and Democratic pessimism that remains below Republican levels during the Obama years.
On the stock market, we have 3 straight tracks in a row, dating back to when just right after Trump was elected, where people are saying it's a good time to invest in the stock market, even as we've seen record high Dow Jones Industrial averages and record high stock prices in many sectors. So those are really important positive indicators that people are feeling good about the economy.
The CNBC All-America Economic Survey shows the percentage of Americans who think their home prices will rise in the next year is at a record. And the percentage who see higher wages in the coming year is at a near record. But it's not necessarily good news for the president. Fewer Americans who have positive outlooks say it's because of President Trump. And more Americans who have negative attitudes, they pin it on the president. That is, the survey shows a disconnect between optimistic views on the economy and views of President Trump.
President Trump's base is starting to erode from him. He's had a drop of 10 points in approval from Republicans. He's now under 80% approval among Republicans. Even those who say that they cast a vote for him in November, they've dropped off in their support as well. When you're left in that position, when your base starts to move away from you, it becomes very difficult to pass an agenda and to govern.
The president's approval rating has fallen to 37%, down from 39% in April. And while President Trump's approval on the economy is a bit better at 41%, those numbers are also down from the prior poll. For Nightly Business Report, I'm Steve Leisman.
Still ahead, the aerospace industry takes flight.
The global demand for travel continues to rise, which is one reason orders for new airplanes are pouring in here at the Paris Air Show. I'm Phil LeBeau. We'll go behind the scenes coming up on the Nightly Business Report.
For defense and commercial aviation companies, 2017 is turning into one of the strongest years ever. Demand for military jets and commercial airplanes is climbing, and that makes this year's Paris Air Show a very busy place for some of the world's largest companies. Phil LeBeau, as you saw, has more for us from Paris.
With Lockheed Martin's F-35 putting on a show in the sky, defense companies are taking center stage at the Paris Air Show.
We are absolutely busier. We have looked at what our meetings are, and they are up by a large, significant magnitude, and we expect to have great interactions all day today and throughout the week.
Military contractors are gearing up for more orders as countries expand their defense budgets, including the U.S., where the Trump administration is pushing for a 10% increase.
I suspect there'll be a negotiation, but we think we can see sustained low to mid-single digit growth in the defense budgets.
For commercial airplane makers, the focus is on clearing out backlogs that now stretch well past 2020, which is why commercial orders at this year's show are not as robust as in recent years.
We're at maximum production, all-time maximum production, so it's not doom and gloom, it's just flat, which is not a bad thing.
The fact is, the number of people around the world who are flying continues to climb, and should for the foreseeable future.
We just updated our current market outlook. Over the next 20 years, we see a need for about 41,000 new airplanes. So we're continuing to see lift there.
Boeing's optimism about surging global demand for travel is one reason why the company is exploring building a hypersonic commercial airplane that would let people fly anywhere in the world within 2 hours. That's right, 2 hours of flying at speeds of up to 5 times the speed of sound. Phil LeBeau, Nightly Business Report, Le Bourget, France.
Wow. EQT bids to be the nation's largest natural gas producer, and that's where we begin tonight's market focus. The oil and gas company said it would pay nearly $7 billion for rival Rice Energy. EQT also said it will have the ability to drill longer horizontal wells, as most of Rice's energy assets are located right next to land owned by EQT. Now, EQT shares fell about 9% to 53.51. Rice Energy shares surged nearly 25% to 24.57. Financial services firm Wedbush speculated that Amazon's deal with Whole Foods makes food delivery service Grubhub Amazon's next logical takeover target. Wedbush says the e-commerce giant could benefit from Grubhub's geographic presence and its delivery infrastructure. It also noted a potential deal could grow Amazon's user base as Grubhub and Whole Foods are found in some of the same markets. Shares rose more than 4% to 45.34. And lab products maker PerkinElmer said it would buy Germany-based Euroimmun Medical Laboratory Diagnostics for more than $1 billion. PerkinElmer said the merger will expand its reach into the autoimmune and allergy diagnostic markets and provide new infectious disease tests to its customers in China. PerkinElmer shares rose more than 6.5% to 67.73.
Valeant Pharmaceuticals has elected billionaire investor John Paulson to its board of directors. The embattled drug company, which is working toward reducing its debt, said that Paulson's experience will help the company complete its turnaround strategy. To date, Paulson's hedge fund has lost nearly $2 billion on its investments in Valeant, but they made money today. Valeant shares were up 6% to close at $13.47. And Clovis Oncology says that its drug for treating ovarian cancer has met its goals during a late-stage study. The company said that the treatment had a clinically meaningful impact in delaying disease reoccurrence in patients who had an advanced form of ovarian cancer. Clovis said that it plans to apply for regulatory approval within the next 4 months. Shares soared, as you can imagine. They were up by 46+% to $87.88.
China's stock markets are some of the world's biggest, but it hasn't always been easy for investors to gain access. That could change tomorrow if a major index provider decides to include shares of some Chinese companies. Bob Pisani explains why global investors are paying close attention.
This is a big deal because indexers like MSCI rule the world since they determine what goes into all these ETFs that we're buying. Right now, only Hong Kong listed stocks are included in the MSCI indexes. There's no mainland China stocks that are in it right now. But mainland China's stock market is worth $6 trillion. That's the same, essentially, as the Hong Kong stock market. $6 trillion is almost 1/10 of the total stock market capitalization in the world, and it's not in those indexes. So the key issues with mainland China stocks, well, there's been a couple of them. First, it's been too easy for companies to halt trading in their stocks. Chinese regulators have now instituted new rules that limits under what circumstances and for how long Chinese companies can halt trading. There's been another issue, limits on how much that could be taken in and out of the market at any one time. But the creation of direct stock links between Shanghai and Hong Kong and Shenzhen and Hong Kong, the two big exchanges in mainland China, now make it far easier to get money into and out of the mainland stock markets. All right, so what does all this mean for investors? It means if you own international indexes through exchange-traded funds, for example, the chances are you will be owning much more China stocks in the next few years if this goes through. The inclusion will take place over several years, by the way, so indexers don't have to go out and buy hundreds of stocks immediately in the Chinese mainland market. Now, of course, there's ETFs for all this. The biggest of all, the iShares Emerging Market ETF, the symbol is EEM, is out there. But if you want more direct exposure to mainland China stocks, there are specific ETFs, symbol KBA is one example, created specifically to track the index MSCI is using. Part of the decision may be strategic, by the way. Vanguard already uses an index from MSCI's competitor, FTSE, that it does include mainland China stocks. The symbol there is VWO. Finally, this decision comes at 4:30 p.m. tomorrow. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Elsewhere, the Chinese version of Amazon is setting records. NASDAQ-listed JD.com's summer sale was the biggest ever. And just like Amazon, JD.com sees drones as key to the future of delivery. Eunice Yoon reports for us tonight from Beijing.
I'm surrounded by toys, diapers, home appliances. Pretty much everything that you would see in your home is at this JD delivery station. This is just one of JD's 6,900 delivery stations across the country. At this one alone, about 10,000 packages are being shipped out. And that's because yesterday, Sunday, was the culmination of a big summer sale for JD. June 18th is the Chinese retailer's own shopping holiday. China already has Singles Day, but JD marks its anniversary with steep discounts. The company announced that during the 18-day period, $17.6 billion worth of goods crossed its sites, up 50% from last year. JD founder Richard Liu says Chinese consumers are looking for quality.
In the past 3 years, we spent a lot of resources to attract the women to buy on our platform. So now most apparel, bags, watches, and jewelries, and cosmetics, every category grows very fast. Also, more and more Chinese consumers buy the luxury brands and high quality brands.
Today, these goods are being delivered mainly by JD's 70,000 couriers. But in the future, the company hopes drones will be delivering too. Amazon is hot about drones, but its plans are being held back by red tape in the U.S. JD, though, already has 40 drones flying real routes, mainly in rural parts of China.
Our target is different. Amazon tried to use the drone to deliver a parcel from the delivery station to the end users. But in China, people live in the apartment. So we cannot use the same way to do like Amazon in US. But the village countryside is a huge market.
Currently, JD's drones can carry up to 66 pounds or 30 kilograms of weight. And they're looking into a model that can one day carry 1 ton worth of products. For Nightly Business Report, I'm Eunice Yoon in Beijing.
Coming up, follow the ad money.
I'm here at the Cannes Lion Advertising Festival, where digital and traditional ad platforms are pitching to the biggest brands from around the world. We'll tell you where ad dollars are moving and which trends to watch. That's coming up on Nightly Business Report.
The merger between DraftKings and FanDuel is being challenged by the Federal Trade Commission and the Attorneys General of California and Washington, D.C. According to the complaint, the merger would harm consumers because together, those two companies would hold more than 90% of the U.S. market for daily fantasy sports. In a joint statement, DraftKings and FanDuel said they're disappointed by the decision.
The world's largest brands have a lot of money to spend on advertising, and those companies are in the south of France right now trying to figure out if they should direct those dollars to traditional or digital media. Julia Borston is following the money from the Cannes Lion Advertising Festival.
Snap looms over the seaside Croisette, where tens of thousands of ad execs will walk, with Snap's giant Ferris wheel as it fights to grow ad dollars. And Pinterest is here, showcasing its new visual search technology with these interactive kiosks. But it's Facebook and Google with these giant branded cabanas here in Cannes that dominate the beach as well as the global digital ad market. Their challenge and focus as Google just yesterday announced more steps to combat extremist content.
There were the issues around measurement, And then, you know, right behind that, in the beginning of this year, we had all this noise, and it's real noise, about brand safety. And I think those are really the underlying issues that are facing marketers today.
So how do you address those issues? Google's here talking about how they're investing in premium content for YouTube, paying for professional shows featuring big stars. And we're hearing from Snap, Pinterest, and the traditional media giants who are here talking about their top-tier talent, which is safe for advertisers on a range of platforms, whether it's old-fashioned television or a story for Snap Stories.
CNBC parent NBC Universal saying it's seeing an uptick in ad dollars.
In the world of premium content, or if we want to call it television companies, we are able to capitalize on that because those are non-issues for companies, particularly like NBC Universal. And we're seeing a tidal wave of money come back to premium content, specifically during the television upfront.
It's not just TV shows. NBC Universal is showcasing new content it's producing in partnership with Snapchat as well as BuzzFeed, such as for the Olympics. They're also featuring their mobile ads sold through ad tech company Cargo, which is focused entirely on premium content.
The issues around fake news, around hate speech inside of video, which you see in YouTube, are all things that remind advertisers that it's not all about audience and just trying to find the right audience, but actually being in contextually right places is a major and important thing that they need to focus on.
This is advertisers here push for more data, assurances, and better deals to make sure they're maximizing their return on ad investment. For a Nightly Business Report, I'm Julia Borston in Cannes, France.
Finally tonight, an 18-karat emerald once owned by the Rockefeller family could become the most expensive emerald ever auctioned. It's scheduled for sale tomorrow. Christie's estimates the stone will sell between $4 million and $6 million. Chump change. That's Nightly Business.
I would point out to your husband that matches your eyes, by the way.
That's very sweet. Yeah. Good night, everybody.